You're listening to That Home Loan Hub. I'm Zibuni Salimova, here to make home loans and property investing simple, smart and stress-free. Let's get you closer to your property dreams. Hello and welcome back to That Home Loan Hub. I am joined by James Buchanan. Hello, James.
Hello, Morena.
I love your
Can
greetings.
I say them both at the same time?
I don't know. You could try, but I think Morena means good morning.
It does. So.
That's okay. It makes sense. It says hello, good morning. I love it. Ka pai. All right, James. So we're going to talk about
reverse mortgages, or as some people like to call them, home equity release products.
All right. Tell me more.
Well, it's a really interesting topic, reverse mortgages. They've got a pretty rough name, and probably for quite a good reason. Historically, people might have been taken advantage of. However, based on my research in the topic and following some of the market leaders that are offering these products, there is a unique part of the market where they're really suitable. For example, you wouldn't, like if I can show you a case where it wouldn't be such a good idea to use a reverse mortgage, but firstly, perhaps say what a reverse mortgage is, just in case people don't know. Basically, reverse mortgages are for retired people, usually over 60. They own their their property freehold, so there's no mortgage on the property. And because they might not have much cash flow, today's retirees don't have KiwiSaver like our generation will have. They're living off the pension if they haven't put money aside. And the pension is really quite low. I think my parents said they buy their wine with it or something.
And that's it. They buy a lot of wine.
Yeah, no, they're alcoholics.
Oh, my goodness. Kidding. I hope they're not listening to this episode.
Just kidding, Mum and Dad.
But you're right. Like, the pension alone is not enough. And if they didn't have a KiwiSaver, because they wouldn't have, KiwiSaver is quite new on the scene, then, what do they do?
Well, everybody, no matter how hard you try, I'm not going to say everybody, but most people live beyond their means. So you find yourself getting to retirement and you've probably earned really good salaries all your life, but all you've got is your house. You want to stay in your house, but you can't do anything because the pension is so low. So what the reverse mortgage does is, if you find yourself in that situation, then you can release some of the equity you have in your home. Let's say 25% of there's limitations now. So let's say you're 60, I think it's something like 15 or 20% of the value of your home that you could release and use that money for something. However, it's a bit different to your normal mortgage because you don't pay it off. You pay it off when you sell the house or when you pass away. So if you get a reverse mortgage and you're 60 and let's say at 85 you want to go into a retirement village, that reverse mortgage is going to have compounded over those 25 years, and that $100,000 that you borrowed would be at least triple that or even more.
So it could be not a good idea for someone.
Exactly. It's not a good idea if you foresee it being a long-term thing. But if you've got no other options, then you can see that then it's worth looking into. But it's a backup. That's the way I would see it. If you don't need it, don't use it. And if you are getting one, you don't need to use the whole balance. You don't have to. It's like a line of credit. You don't have to draw the whole thing down. You can just use what you need as you go.
Can you pay it back at all?
Yes, you can.
You don't have to wait until the sale of the property, right?
That's right. You can pay it back earlier.
Okay, cool. Because I guess a lot of people will be sitting there thinking, okay, I'm 60, I need a hip surgery, and I don't have private insurance anymore, and the wait list with the government is yay long,
Yep.
So it's going to take me 2 or 3 years to have that quality of life back. Meanwhile, my friends are having fun. They may be cycling across the country, having wine tours, or, I want to join the gardeners club or the flower people, whatever. You want to continue to have the quality of life, but if you've got constant pain, and it can be fixed with surgery, and if you go private, it will be faster. I guess that's one of the cases where people would use it.
Oh, absolutely. And that's great. That's a great example of you want to use it for something that's going to benefit your quality of life, like you just said. So, and then you're still young enough at 60, I think, to You might even still be working. I don't know. But the key thing would be we would work with people to see how are you going to pay it back if you took it so young, because otherwise you're going to hinder yourself later on in life because you won't have if you want to make a decision to go to a retirement village, your capital when you sell your property or your funds when you sell your property, you're going to lose a big chunk. You might not have enough to get into the retirement village if that's a plan.
The few that I've seen in the past we've helped with is people wanting to make the house a little bit warmer because they're not ready to go into retirement village, but they're already in their 80s.
Yep.
And they just want to make the house a bit warmer so they don't need, so they don't want to get sick all the time, for instance, during winter. So we've helped with those. I've also seen the one where, very sad one, a mother, her daughter was dying of cancer. And she just wanted to make some memories with her. So they borrowed money and went on a cruise and trips across the country, across the world, just as memories to make with their daughter.
Okay. Yeah, no, that's awesome. So if you can use that for that kind of thing, and that's what we'd be really encouraging, making sure it's been spent on priorities. And later in life, if you are taking the reverse mortgage later in life, obviously you're not going to have the compounding impact. So it's not going to be such a big negative on your net worth. And the other thing to think of is it doesn't necessarily affect you as the borrower. It's a conversation to be had with the family, probably. Children who may be expecting inheritance. But often I'm hearing is that most of us, in our generation, we've actually got our own money. But our parents have this idea that they have to leave us, they have to scrimp and save and not, have a nice lifestyle just so they can leave everything to the next generation. Yeah. And that's not necessarily always the case. I'm sure we'd love to see our families go and spend their money. Our parents go and spend their money. They worked hard for it. But there's definitely a mindset amongst that generation that they feel like they should be leaving a lot
something behind. But yeah, that's right. If the kids and parents see eye to eye and go, no, actually go enjoy your life, mum and dad, don't worry about me, I'll be fine.
Oh, exactly.
I'll work harder.
Well, yeah,
exactly. Awesome, James. Thank you so much for putting your own spin onto this really important topic, I think, because we do have a lot of older listeners as well that maybe have parents, and they just want to help out their parents, but they don't know how. This could be a potential way. So get in touch with us. We'd love to help. I'm sure James would love to help in that area.
Absolutely. Please, just, we're not going to force anything upon you. We just want to hear your story and see if it's something suitable for you. I'd love to hear from anybody interested in that product. So
sounds good.
Feel free to contact me.
Awesome. Thank you so much, James. Have a good one. Bye.
Bye.
And that's a wrap on that Home Loan Hub. Don't forget to hit subscribe and join me next time for more property tips and tricks. Your next smart move starts here.